Morning, everyone. Welcome to this morning's edition of the NBC Markets Morning Call. It's Wednesday, 22nd of July. We've finally got a green, green thumbnail. Look, the official investors shake off the Iran thing to buy back into chip stocks, but I think we all know it's FOMO. It was very much a FOMO-driven rally last night. We had the best rally in the stocks for a month. The stocks was up 5%, so that's that. Basically, the stocks is that very dark green section in the bottom left-hand corner there, and a little bit around the middle there, where Caterpillar is and Lamb Research, etc. But it was a bit of a nothing night. I mean, but there was some serious moves in some of these chip stocks. So Micron was up 12.2%, SanDisk was up 14.3%. The new ADR from the Korean mob, who are 60% of the HBM memory globally. So that very much drove things higher. And look, they're just marching to the beat of their own drum at the moment. The chip stocks or the stocks. I think we had oil up, we had gold and silver, but basically everything was up last night. It was just such a broad market rally in commodities and energy and everything. I kind of feel sorry for those stocks that are in the red there in the middle that didn't get to participate. Look, it's we had back to reality. The Houthi militants have declared a maritime blockade on Saudi Arabia. Which has caused a bunch of ships to do a U-turn. So for those of you, picture the Middle East in your mind, and where the Suez Canal is the Red Sea on the left-hand side, the Strait of Hormuz, which no one knew where it was prior, is the one on the right-hand side. So both of those are now effectively blocked. But apparently President Trump said that Iran's desperate to do a deal. Take from that what you will. I'm not, as my grandmother used to say to me, don't argue with an idiot. People start to question who the idiot is. Crude was up 2.5%. All the risks haven't gone away, but markets kind of moved past it. There were actual audible groans from both like Reuters and Bloomberg reporters this morning when the Middle East was mentioned, and then they just skipped straight back into how much Micron was up. So that that old ostrich head in the sand thing's doing its best, certainly doing its best efforts at the moment, and that's why shorting's a mugs game in equities. Look, the technicals are just back and forth here at the moment. I mean, look, I think the most poignant thing is that we're very much neutral on the technicals on the daily. Nikkei bounced back. Hang Seng was largely flat. China was up a bit. I mean, they're starting to get a little bit of that AI glow back with this moonshot thing. They're announcing a 50 bill IPO or something along those lines. And the Chinese government is going to stump up a big chunk as well. They also had growth numbers at 4.3, which has led a lot of people to start thinking because China's got a 5% growth target, and they said they will stimulate to maintain that growth target. So 4.3 means that everyone's sort of expecting stimulus. What form that comes in is very different. Western world tends to just use blunt instrument like increasing the money supply and cutting rates, which ends up causing loads of problems down the road. China tends to be a little bit more targeted and think a little bit more long term, which benefit of not having to get re-elected. But that is not necessarily going to be a good thing for Western indexes, because they're the fact that China hasn't been buying oil and refilling their reserves is pretty much the only reason oil's not back at $110 right now. Any stimulus event could be a bit of a sucker play in terms of the US market in particular, because I think we'll largely see commodities and raw materials go higher. Energy stocks will go higher, but that's really going to smash that growth end of the market and cause a few troubles because oil, it's not a big leap to say that oil is going to be the next thing that'll end up rallying. Margin debt, just when you thought it couldn't get any higher. I think I mentioned this last week. I wrote a Livewire article on it last week. It was at 1.4 trillion. 7 whole days later, we're now at 1.5 trillion. And you can have a look at that relative, the obviously the S&P on the right and the margin debt in the blue, the scale there on the left. Then that look, obviously, I didn't even bother getting around to the 3 times and 2 times ETFs. They've had a massive increase as well. So this is just margin debt. As you can see, when we get these really severe spikes, both the market rallies and but then eventually kind of peaks. So I mean, obviously it's a little bit hard to see with the context and how much is this thing's rallying now. We did have Pete Hegseth, the defense czar in the States overnight, basically go to Congress asking for more money. He reckons it's about 38 billion has been spent so far. Late May, they were at 30 billion. He's pushing for an extra 70 billion supplement to the defense bill, which they're already asking for 1.5 trillion, up from their existing budget of 1 trillion. I didn't think that a trillion just would be a nothing number so quickly, but apparently it'd be interesting when we start to talk in whatever the next number is. I'll have to, for those of the maths nerds out there, chuck in what the next thing is after a trillion for me in the comments. We've got Google tomorrow as well, and then Tesla. What else we got here? There's not much else in terms of futures. Were up around about 20 points in the SPY. Wasn't much in terms of corporate news. Gold and silver were up as well. Last night, silver, particularly copper, just keeps on powering on. It's like it's like perpetual motion at the moment. And then obviously, crude up 3%. Uranium had a decent bounce, and lithium as well. So that's, super risk on last night. And we'll just, look, to be honest, I think we'll just see what happens. I'd be more leaning towards thinking this feels like a bit of a sucker play in the stocks. And we thought that it was sort of conflicting reports that SK Hynix was reporting earnings today, but apparently not till the 29th. So it's next week, which we sort of sourced from the actual SK Hynix website, but most of the investing.com and TradingView, etc., and Bloomberg were all saying it was today, but that is incorrect. But that'll be I think that'll be a pretty blockbuster earnings next week, and it'll be in our Asian session time. I had to brush up on my Korean to find that earnings result. But yeah, and unfortunately, this was in US time. I'll fix up this calendar tomorrow, but we've got Google tomorrow. I'm assuming Tesla will be the same because they don't tend to have them on. I don't think Tesla will be reporting on Friday. And we've got Eli Lilly as well coming up, and RTX, etc. So this is just offset by a day because it's in that US time. And then we've got a bunch of the hyperscalers next week as well, which, all eyes on CapEx. But yeah, go to our podcast, and we did a bit of a deep dive into the chip stocks and which ones we'd be happily buying on the dip. If you did listen to that last week, you probably would have bought some Micron or SK Hynix and been very happy this morning. So there is, some actionable benefits to listening to the podcast. So like and subscribe, go to your favorite podcast platform, scan the code or mpcmarkets.com.au/podcasts. We've got a new member joining the team, and this week with trading background, it'll be a massive reveal, to bring a bit of good chat to the new podcast this week on Friday afternoon. By the dip, so we'll be closing early next week, particularly expressions of interest, definitely closing by middle of the week. If you're holding S&P or SPY, IVV, sort of ETFs, this is open to retail and wholesale. We don't do retail often, so if you're retail and you want to get involved, go and have a look. Scan the code. You can just go to our homepage. It's on the homepage as well. Capital efficient way for a 3-year strategy on the S&P 500 index. And yeah, very much worthwhile having a look at it. Just purely from a capital efficiency standpoint, you put down a fifth the amount of capital to get the same amount of upside. And obviously you can go and put that extra money to work elsewhere in something a little bit safer and de-risk your broad portfolio returns. This has been super popular. It is definitely worth having a look at, and it's just it's a new and innovative way of doing the same thing everyone's already doing. It's just better. So go and have a look now. Have a great day, people, and we will speak again tomorrow.